GM, everybody. Welcome back to your bi-weekly vibe check, your bi-weekly Frax check. I'm your host, Capital K, and we'll be diving straight to the source of truth via checking the chain. But before we do that, you know what to do. Smash that like and subscribe button. All right. So this Frax check, I call this one, the name is Bond. Frax Bond. License to yield. And obviously, this week was the announcement of FraxBonds, where you can now have access to effectively the first, I think is the one of the first zero coupon bonds on chain. This has been a long time in the making. This was coming out right after sFrax. So now you see that we have the treasury yield mixed with zero coupon bonds, all on chain, all available under the same Frax flagship stablecoin, Frax. Now, with that, let's dive straight into the supply as we always check. This is the Frax stablecoin supply, and it's currently at 650 million. It has been this way since basically the beginning of December. And for the last 8 weeks, we pretty much haven't moved at all. Moving on. The peg for Frax stablecoin is currently at a high of 0.999 to a low of 0.997. And that is the dashboard, though. We got to go into the market and check. So I went to 1inch and swapped $35 million of Frax into USDC. Now note, we receive an exchange rate of 0.993. Please make a note that at the beginning of 2023, I was doing like 100 million swapping into here to test for the peg. But because we have reduced our size of the Frax base pool down to about 70 million, 72 here, as you can see, I also had to reduce the number of Frax because, well, there are less Frax outstanding. So there wouldn't be that 100 million Frax to come in and smash the pool. Additionally, this this Frax has been repurposed and moved over to the Frax PYUSD pool. Okay, so then I took $20 million of Frax and swapped it to PYUSD, and you also get an exchange rate of 0.993. So in total, that is a exchange of 55 million Frax into USDC slash PYUSD. All right, just so we can set the number correct here. Moving on, we're going to take a look at the balance sheet. So literally basis points of changes across the board. So I'll just go through it quickly. We pretty much have about 801 million in total assets, increased by 1.8 million to 20 bips. Liabilities increased by 1.5 million up to 720 million. Again, 20 bips increase. Then the equity also increased by 300K. So fairly, basically no real change. Now, here though, we see some interesting bits because our collateral ratio actually dropped slightly by 60 bips down to 94.1%. Here, how did I get that? I took the total assets, 801, minus the lock liquidity, 123, gives us 678 million, then divided that by the liabilities that was mentioned above at 720, gives you a 94.1% collateral ratio. That is that. Moving on. Here we have a snapshot of all the Frax related pools across or in curve. See here, if we add all of these guys up, it comes out to be about 208 million, 218 million. And when you compare that with three pools, 198 million, all of Frax's pools are basically 1.1x that of three pool. And for longtime listeners, you guys know that we reached a point of 3.3x during some time last year. So we have fallen drastically in terms of liquidity on curve. But again, that is a mark that we strive to hit sooner than later. And just to read off all the liquidity pools, that is 73 million in Frax BP, 9 million in Frax 3 CRV, 1 million in Frax PP, and then 135 million in the PYUSD pool. All right, moving on, we're going to take a look at another product that is the sFrax, guys. The sFrax finally got up to, I think it really bounced off of the low here. We are currently at 28.5 million in supply, and or TVL, you want to call it that. And that was a increase of 12.6% from 2 weeks ago. We got as low as, I believe, 20 million on this. So it's kind of nice to see it trending upward. And as kind of the market is being turbulent, pretty sure people are looking for some good safe yields right now. And then moving on, we have the estimated APY of 5.4% earning on the sFrax vault. There are 195 sFrax holders as well. And here is the slide that I am very excited to share. This is the FXB, the FraxBond slide. We are currently at 2.1 million in TVL on Curve. But let me take a step back first. How did the bond even get on Curve? Well, you can go to the apps.frax.finance website and go to the FXB tab, which is on the left-hand side of the website. You can navigate there, and you will see the three bonds being currently offered for purchase. And the first bond is the July 1st, 2024 expiry, which unfortunately all sold out. Then the following is the January 1st, 2025 expiry, which also sold out. But you guys are in luck. January 1st, 2027 expiry still has about 200K left to be purchased, and the yield to maturity is about 4.3% here. All right. And one thing to note is FraxBonds will always expire on whether June 30th or December 31st, though there will be yearly terms issued during those expiration months. So be sure to pay attention to that. Moving on, we have the second stablecoin, or rather the crowd favorite stablecoin, that is FraxETH. Here we exhibited a 3.1% increase from last FraxCheck. We're currently at 312,818 FraxETH. But outside of that change, we are pretty much still the same since 2FraxCheck ago. 72% is in sFraxETH, and the remaining about 19% is in the liquidity pools. And then we have 10% literally floating in the ether, being used elsewhere or just being held in wallets. That is the monetary premium. That means everybody, the sFraxETH and the FraxETH LP providers, are earning a nice 10% bump. Now, FraxETH is still a stablecoin, so we got to go in there and check the peg. Here, I took 2,000 FraxETH and swapped it for ETH, and I received a exchange rate of 0.992. Similarly, right, we have split the liquidity pool. Instead of just being all FraxETH and ETH, it's like FraxETH and ETH, FraxETH and WETH, and FraxETH and sTETH. So initially, I started with a 3.5K FraxETH swapping into ETH. Now I have to kind of divvy that number up because the liquidity is well in other pairs. All right. And speaking of the other pairs, all of the liquidity pools add up to 172 million in TVL, and the composition is roughly 73% in FraxETH and then 27% in the other ETH, WETH, and sTETH pairs. So that is for the FraxETH. And now we're going to take a look at the market share. And unfortunately, I got some bad news. We got flipped. Not the good way, and not the way I like to be flipped. We have Mantle Staked ETH flipping us to be the fourth largest LSD provider. That doesn't feel great. Let me be completely honest. I do not like that we were flipped, and now we have another competitor that is ahead of us growing at an astronomical rate. But for us, though, we are still holding on to that 2.5% market share. We grew 2.3% over the last 30 days. Our competitor, Rocket Pool, grew about 4.6% over the last 30 days, and Lido grew 2%. But Lido owns 75% of the market share, so that's 2% is astronomical. But really importantly is like Mantle Staked ETH came out of left field and basically dominated the terrain with a 114% 30-day change and a 16% 7-day change. And the reason why they kind of grew so largely and kind of dominated us out of our coveted fourth place slot forever is the yield. Mantle Stake ETH is offering 6% APY. Okay. We used to run the yield department, but now we have also lost that title. And unfortunately, we are in this fight with this new contender that's coming in. And I believe the way that they're able to offer higher yields than we are is because the foundation or the treasury, the protocol's treasury, has ETH of their own. They take that ETH and stake it, and then they apportion some of that ETH native yield into subsidizing or basically giving it to other METH or METH stakers. So that's the boost that any METH stakers are receiving. Okay. So let's see how sustainable that is. Some say once it reaches a certain threshold, it will start falling down naturally. But we don't know where that equilibrium would be. But right now, that's that. So, but I still got to give you the numbers. So for FraxETH, there's about 700 million in TVL, earning about 4% APY if you were to choose to stake in sFraxETH. Additionally, here on the right-hand side of the chart, I'm going to paint for our listeners, I'm going to paint it for you. It is a chart depicting what you would have earned if you had staked with sFraxETH from a year ago to today. And you would have earned 42% more than RETH and 24% more than STETH. So this isn't cherry picked. This is literally a year worth of data on sFraxETH's performance. Numbers don't lie. Moving on, we have the middle child, as I call it, the forgotten stablecoin, and that is FPI, the Frax Price Index. The supply didn't change at 84.5 million, but the annual inflation index did go up to 3.3%. But fortunately, FPI is above peg by 3 bips, so perfectly aligned. The Treasury TVL is still 92.9 million, with about 12% of that treasury in the convex FPI Frax pair. And the equity, this is when you take all of the assets, pay out all of the liabilities to the FPI holders, there still remains an excess of $4.8 million. And that is called the quote equity portion. And that acts as like a buffer in case the asset draws down or whatnot. There's enough equity in there to pay for the FPI liabilities. So switching gears here, we have a look at the DeFi Trinity, or one of the legs. This is the lending. This is FraxLend. And I'm happy to report, I believe this is the ATH, and that is the all-time high TVL of 301 million with $85 million borrowed, which I believe is also an all-time high number. This represents a utilization rate of about 81%. And the way I calculated that 81% is you take the amount borrowed divided by the amount lent. And that's where you see us at 81%. So very healthy numbers across the board. I think this is one of our most banging products that we created. So very excited. So good job to the team. Clap, clap, clap. Now, moving on, we have the Frax swap. Wow. Here, this is a very underrated swapping facility. There is a built-in TWAP, right? Instead of a TWAP, instead of it being on a centralized exchange offering, or you need to do some crazy coding if you want to execute it on chain, there is a built-in product for you here. This is called the TWAM, where you can set a DCA cost. But anyways, I would digress. Let's focus on the numbers. Here, there is 68.9 million in TVL, which increased by 3.2% since 2 weeks ago from the last FraxCheck. But what's more important is over the month of January, this little DEX has facilitated 100% of its own TVL. That means it facilitated 68.3 million in trading volume. It had 100% turnover. I don't think there are a lot of DEXs out there that can claim it had 100% turnover while also being middle 8 figures in size. But how did that happen? Well, because the FXS Frax pair generated almost $20 million in volume over the last 7 days. This is definitely on the upper end of where we normally clock in at, because for FXS and Frax, this pair it usually clocks in between the 10 and 15 range. So this is definitely on the higher end of that number, and I'm glad people are finally recognizing the value here of FXS. Next, we have the profitability. This is the show me the money section, and we'll dive right on in first with, this is probably going to be my favorite, or it probably is already my favorite, the FraxLend AMO. It is so clean. The way it works is so beautifully designed. It's so simple, right? So Frax, defined the protocol, will mint Frax to then loan it out on FraxLend, and they get to pocket the interest. Full stop, nothing confusing about it. All right. So you take, it's currently right now, there is a 202 million allocation cap. That means it can go up to that amount. Then there is 86.2 million that is minted. All right. That means in existence. And then of that 86.2, 71 million, 71.2 is being lent out. And the reason why not the full 86 is being lent out is because Frax wants to make sure that there is a healthy interest rate to be earned by all the participants using FraxLend. If Frax were to come in there and kind of put in the full 202 million that it was allotted for, that would really dilute the interest rate, right? And that would kind of hurt everybody. So because of that, Frax has to play this game to make sure that the market has a healthy interest rate. But all that is to say that in the month of January, FraxLend generated $248,000 so far, and we still have 7 more days to go. So if you were to do some quick math, you could probably see that we could probably clock 300K in January for FraxLend, which is amazing to see, right? And that is an average of about 62K a week. So if you were to annualize that, 62 times 52 gives us about $3.2 million in an annual run rate. Beautiful to see, beautiful to see. But that's not all. FraxLend also, or the AMO, also makes money from liquidations, okay? So these liquidations that happen, as unfortunate as they are, and I've been warning folks to be safe out there, there's nothing wrong with low leverage. I myself partake sometimes, but you got to manage your risk. And here, unfortunately, some of the users did get licked, and we managed to make 18.7K for the FraxLend liquidations. So that's that. Pour one out for the homies. Moving on. We have the FPI monthly revenue. Now, we know Frax is going to take this in-house, so then this revenue is going to be attributed to Frax. I'm sorry, not in-house. I meant they're going to merge FPIS with FXS or some form of that machination. So this is going to be then internalized once again under one token. So for January, the profit is $85,000, and that is a net number, okay, after paying down the amount that is needed to maintain the FPI peg. In addition to that, you can see here on the chart that FPI was going through a pretty, slumpy slump during the middle all the way to the late last year. where it actually got negative in a couple of those months there. And fortunately, there was the equity portion, as mentioned earlier, to kind of buffer that a bit. All right. And now we end this with the FraxETH revenue. Here, I simply took the amount of ETH earned per day, multiply that by 365 days, gives you the total ETH for the year. You multiply that by 8%, which is the fee share that Frax receives, and then you divide that figure by 12 months to give you the monthly run rate. And here for January, the monthly run rate is about 128K. All right. That obviously the price fluctuates with the price of ETH, so it's not as clean as the FraxLend. But if you were to take that 128K and annualize it, it comes out to be about 1.5 mil as well too. So all of these different products, right? FPI, FraxLend, FraxETH, the AMOs all add up to a pretty substantial number. And with that, I gotta end it here. But before I do, make sure you smash that subscribe button, hit that like button, and head over to flywheeldefi.com to read up on all the latest and greatest content on Frax Finance and DeFi. I'm your host, Capital K, and you can find me on Twitter at 0xcapital_K. I'll see you guys in 2 weeks. Peace.